Hey guys, it's Mrs. Lamphere, and in this video we are going to look at the Unit 3 short answer portion of the exam and kind of walk you through getting started with this template. So make sure first of all you notice that there are several tabs. So there are 4 questions in total for the short answer portion of this exam. Number 22, let's take a look at it and see what it says. The balance sheet of Miss Prompt Truck Rental on December 31st is as follows. So this is their balance sheet. Their balance of their cash account is $9,500. Their accounts receivable has $13,900, and so on and so forth. So that's the balance of all the accounts above. After December 31st, Miss Prompt Truck Rental had the following transactions for a short period. So this is a list of the transactions that the truck rental company incurred. So we need to list the December 31st balances of all the assets, liabilities, and owner's equity accounts. So I already did that for you. So here are the balances of those accounts. And so now we need to record the effects of each of these 6 transactions in the preceding tabular order. So all that means is we have to record basically the effects that each of these transactions have on each of these accounts in order to get the balance at the end after all of these transactions. So the first one's been done for you, and I'm using the hints template with this. So the first transaction A, bought office equipment at a cost of $2,700 paid in cash. All right, so what does that tell us? We paid in cash, so that kind of triggers the fact that we're going to be using our cash account for this transaction. So you'll see down here, we spent that cash. So we spent $2,700, so we want to subtract that from what we had in our original balance, and then we calculate our new balance. So open up your calculator in order to get that amount. So we had $9,500. We spent $2,700 towards office equipment. That gives us a new balance of $6,800. So make sure to record your new balance, and then that's the balance you'll start with when it comes to your next transaction. Also, for this transaction A, remember we always affect 2 accounts with each of these transactions, at least 2 accounts. Bought office equipment at a cost of $2,700. So we spent that $2,700 in cash, and it went towards our office equipment. So we're increasing the value of our office equipment. So we take that original balance of $3,800 plus $2,700 that we just put towards more office equipment. That gives us a new balance of $6,500 worth of office equipment that we have. Okay, so that's how this assignment works. Again, make sure you calculate your new balance. There's a line here for the new balance every time you make a transaction. And so for this hints template, I highlighted the cells that you should be using for each of these transactions. So you'll notice in all of these transactions, you're affecting cash. So you should be making a recording in cash with every one of these transactions. There is one of these that's kind of tricky. Let's see, a transaction E. Okay, so with transaction E, it says we purchased 2 trucks for $30,500. We paid $15,000 cash and signed a notes payable for the rest of the balance. So we purchased 2 trucks. So we look at our truck account. We just purchased 2 trucks in the amount of $30,500. So that's going to increase the value of trucks that we have on hand by $30,500. That gives us a new balance. We're going to want to calculate our balance by adding our original balance, $68,000 plus $30,500. Gives us a new balance of $98,500 for our trucks. Okay, and then we paid $15,000 cash. So that's going to affect our cash account, obviously, by $15,000. We paid that money and it went towards our trucks. Now, last thing we have to note is we signed a notes payable for the remaining balance. So you're going to want to take this $30,500 minus what we paid in cash, and that's going to tell us what we have left that we took out a loan for, or a notes payable, which is a liability, meaning we owe this amount of money still for those trucks. That's going to go under our notes payable account. Okay? So, and then once you're done with all of those transactions, you're going to want to carry the balances down to all of these highlighted cells below. So this trucks account is already completed. Obviously, there's only these two effects to our trucks account, so we can go ahead and carry down that $98,500 balance. We can go ahead and carry down this office equipment balance of $6,500. And once you complete all the transactions, you will carry down all the balances for each of these columns. In order to double check and make sure everything's correct, you're going to want to add both sides of the equation. So all of these numbers, all of these balances to the left of the equal sign should equal all of these numbers to the right of the equal sign. That's how we know that we balanced everything correctly. Okay, let's look at short answer question number 23. The fast delivery service submitted the transactions given below. Analyze these business transactions. So on October 1st, Joseph took $25,000 from personal savings and deposited the amount to open a business checking account in the name of Fast Delivery Service. So, and I have those transactions written again under each business transaction letter. So, as you know by now, we don't care about personal savings. So a lot of people might think right away, okay, so he took it from his personal savings and put it towards his business, so we need to subtract that $25,000 from somewhere. Remember, we don't care about personal savings, we only care about how it's affecting the business. So we need to analyze these transactions. Which two accounts are being affected? So we know that $25,000 is being put towards the business in a bank account. Okay, so it says he's opening a checking account, so we know that as we look over here to our list of accounts, we're going to want to use, you're only going to want to use the names of these different accounts over here under your list of accounts. So we know cash in bank is being affected, and whenever we start a business or make that investment of money, that's also going to affect our owner's equity account, which is our capital account. And for this business, it's called Joseph Capital. So those are the two accounts that are going to be affected by this first transaction. What type of accounts are each of these? So our cash in bank, we should know by now that that is an asset account. And Joseph Capital, should know by now that that is an owner's equity account. And now we need to complete the T accounts below by filling in the account name, which side is debit and credit, and which side is going to increase and decrease. So if you're using the hints template, you have this kind of chart of the different accounts off to the side here. So we know cash and bank is one of ours that we're using. And Joseph Capital, so we're going to want to put those names at the top of our accounts. Cash and bank, I said earlier, is an asset account, so I'm going to want to look over at my asset account demonstration over here, and you should know by now that debit and credit is always on the same side. Now we need to indicate which side increases and which side decreases. So, I can't remember, there we go. You can put pluses and minuses in an Excel document. You might have to hit Enter or Tab in order for it not to think it's an equation. But so for our cash and bank account as an asset, we know we increase on the debit side, decrease on the credit side. Joseph Capital is an owner's equity account, so we know we're going to decrease on the debit side and increase on the credit side. So let's look at the amount we're working with. Joseph took $25,000 and deposited it to the bank, so we know that we're increasing by $25,000 for our cash in bank. And that also increases over our overall value of our business by $25,000. So both of these accounts are increasing by $25,000. Okay, and that's all there is to it for that first transaction. Okay, same thing with the rest of these transactions. So you're just going to read the transaction, decide which two accounts are being affected by going back to your list of accounts, deciding what type of accounts those are, And by now you should be using that little cheat sheet that I sent out, the PDF document kind of highlighting different account names, and then completing the T accounts and the effect of the transaction on each of those T accounts and what that looks like. Okay, so there are 4 transactions in total for number 23. 24 is set up the same way, except you have some additional accounts. So in the previous one, you just had assets, liabilities, and owner's equity. Now in this one, we're throwing in some revenue, expense, and withdrawal accounts. So make sure you're sticking to this list of account names when you're deciding these transactions. And the same goes for number 25. Okay, so again, you're going to work with all different types of accounts in this one. Again, I have the list of accounts available for you, so make sure you're using those names, and you should be good to go. So when you're completed with this short answer portion of the exam, make sure you submit it to the correct Dropbox. And also, if you haven't already, make sure you've completed the multiple choice true-false portion of the exam as well.